Hi, I'm Marty Van Diest with Valley Market Real Estate. It's April 10. I want to do a little video on how the mortgage market has changed, how to get a home loan during the COVID crisis. Things have really changed. I've talked with a couple mortgage lenders today. I talked with two other ones on Monday, and you can see the info on that if you subscribe to my YouTube channel, which you should be doing. You should be subscribing to my YouTube channel because more videos are coming out all the time, and some of the stuff is pretty important to watch for. But make sure you subscribe. Today, I talked to two lenders, and they gave me some really interesting information. The first one is Scott Sheard at Primary Residential Mortgage, and he gave me some ideas of what's been going on in the last month or so that have really changed things in the mortgage market. The first thing that happened was way back in February, interest rates suddenly dropped. And as soon as they dropped, everybody wanted to refi their houses. So a whole bunch of people started refinancing their houses. The amount of loans in the pipeline normally is about $1.6 trillion worth of loans. That's nationwide. $1.6 trillion. That means in the pipeline, that means people have applied for their loan. They're somewhere in the process of getting their loan. But it's not closed yet, so it's in the pipeline. Right now, there are $7 trillion worth of loans in the pipeline, and 2/3 of those are refis. So at this point now, it's really hard to refi because there's such a backlog. People are having a hard time closing those loans. You got to get money for those loans, and things are drying up a little bit here and there. But you can still get a pretty decent loan if you're purchasing. So if you're looking for if you're a first-time home buyer, you really should give us a call because there's some still really good loans out there. But things have changed. Definitely things have changed. One of the things that's changed is lenders are getting a little bit more careful about who they're loaning to. On Monday, I talked to Alice Rowe, and she let me know that there were certain overlays that were not required in the past, but are required now. For example, FICO credit scores at one point were very low, and in fact, for FHA loans, sometimes were not required at all if you had, maybe you just didn't have any credit at all. A lot of Alaskans work that way. They maybe they're commercial fishermen or self-employed, and they just don't go into debt, and so they don't have any credit history. But with an FHA loan, you could still get a loan with alternative credit, which you did there's a lot of ways. We don't need to get into that. But now they definitely have credit scores for some of those, much harder for a self-employed person to get an FHA loan these days. I talked to Monica Barton at Academy Mortgage, and she reminded me that Alaska Housing hasn't changed their credit scores. So you might be able to add an Alaska Housing to an FHA loan and still get a pretty decent loan with a lower credit score. If you're a first-time home buyer, you might be able to get an FHA/Alaska Housing loan with maybe still a 2.75 interest rate. It's possible. These are changing every day, so don't take my word for it. That's just today. And tomorrow it might be different. Of course, tomorrow's Saturday. You're not going to get a loan tomorrow. But check things out. They're moving. Tiffany Ischinger at First Rate Financial gave me a lowdown of many changes. And one of them she talked about, of course the other ones did too, but she was more specific about how the debt to income ratio is really, people are looking at that much more carefully than they did in the past. When I started 29 years ago, I remember 29-39. You could have 29% of your total income in debt. And if you added the house, it couldn't be higher than 39% of your total income. Well, with VA loans and FHA loans, they were getting much higher than that. I remember closing some at 60% and even higher, your debt to income ratio. Well, that has really that pretty much gone by the wayside. You're going to have a lower debt to income ratio most likely. And in general, the lenders are just asking a lot more questions. Verification of employment is one of the things people are looking at very specifically. In the past, they would call your employer maybe 10 days before closing and make sure that you were still employed, and they wanted to also make sure you're going to stay employed. Now they're calling your employer sometimes the day of closing, and even more so, some of the underwriters are researching your employer, trying to see if your employer is going to stay in business or if your employer is thinking about laying off people. So they're looking at your employment much more carefully than they did in the past. One of the other things Tiffany mentioned was the fact that for many of the loans, reserve requirements are increasing. And in the past, you might have not needed so much of a reserve in your bank in order to close the loan, but now you have to have some money there for many of these loans. You have to have not only enough money to pay your closing costs, you have to have some money in the bank to pay your payment for the next few months. And those reserves are different for each loan program, but you really should check on those, especially if you're going to buy an investment property like a fourplex or a duplex or something. Those are pretty important. However, like I said, it's not all bad news, because did you hear the 2.75 interest rate? Don't take that to the bank, because that could change. But some people were getting that this week, 2.75. That's amazing. So definitely check. Make sure you are pre-approved. You know what you're doing before you start looking for a house. Otherwise, you're just wasting your time and everyone else's time too. So go talk to one of these lenders. I've given all their detailed information on this video. Give them a call. Of course, there are other lenders you can call too. Make sure and talk to a pro, though. I really like working with people that know what they're doing and are going to look out for your best interest. So do it. And hey, before I close this out, wait, I'm going to show you the view out the other side of this little cabin. Check that out. You got a view out each side of this cabin. I wouldn't mind living here myself.